Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Chris Hervochon, who's the founder of Better Way CPA, accounting for marketing agencies and nonprofit organizations. Chris, welcome to the program.
Thanks so much, Mike. I appreciate you having me on.
You're welcome. And so I like your specificity of focusing a target audience on marketing agencies. And so I want to learn about how you focus on them and also your work with nonprofits, but get us started with what your entrepreneurial journey's been like to this point in your career.
Yeah, I appreciate that. So the entrepreneurial journey has been a little bit all over the map. Started out as a golf pro. That lasted for about 5 minutes. And
it was a fun 5 minutes.
It was a great, yeah, it was great. That in itself is a very entrepreneurial journey because it's just you. And, for the most part, unless you're just working at a club and that's all that you do, but, if you're trying to play and make money for a living, it's a very entrepreneurial journey because it's all on you and you're financing it yourself. And so that's, I guess, where the entrepreneurial journey started. But, from there, I went into forensic accounting. Then I got into corporate accounting and finance. And when I was in that role is when I got my CPA and started what is now this business as a side hustle. And I did the side hustle thing for 7 or 8 years. And I've been out fully on my own for 4 years. And when I did that, it was just like, okay, I'm going to go and I'm going to do this. I'm going to be by myself. I'm never going to have any employees. And now we're a team of 8. So That's how it goes,
it really is. And, one thing builds upon and leads to the other. And it's not like, I made this mistake, so now I'm going, or this is a bad decision. So now, no, it's just like pivoting. And because I learned this during this period of my business, I'm going to now bring on an employee or 8. So I think that's the natural progression of an entrepreneur.
Absolutely. It's, if you really distill it down, it's all about iteration. Iterating from one thing to the next.
Yes, and I love the word iteration because we always think of it as reiteration. Well, iteration is what you just said. Reiteration is doing it over and better and improving, and so it really is. You got to watch your numbers, watch your processes, watch your systems, and then see what could be improved, and then take this little line and go all the way back to the beginning and add it back into your processes and systems to make sure that it's implemented. So talk a little bit about some of those systems that you do, within accounting for marketing agencies and business owners.
Sure. And that's been an evolution as well. I mean, to your point, the things that we do now in our business, you couldn't even do those when I started this business as a side hustle, whatever it was, 11, 12 years ago. They just weren't possible. Things like business process automation and the tools that exist now to be able to do that, and the tools that exist now that are in the cloud and that you're able to connect and move data so you get these leveraged insights in your business. Those things weren't possible a decade ago. They weren't even possible really at any sort of scale 5 years ago. So those are some of the things that have been really interesting. Accounting has always kind of sort of been accounting. Yeah, we've got some new tax laws and things that are impacting business owners now, but that's been the same situation for forever. It's just, it seems that the pace at which those are happening now is a little bit faster. But things like cloud accounting software, that's what's been interesting certainly in the last decade for sure. The ability to do no code automation, services like Zapier and Integromat, which is now Make, and the ability to do RPA. I mean, those are things that haven't really existed until fairly recently. And those are the things that we can use to make businesses more efficient, more profitable for sure. And then also just to give better insights into how the business is operating for the business owner so that they can make better decisions.
So I agree with everything you just said. And as you were finishing up, a light bulb went off, and I want to bring this up because I think this is a really interesting perspective, which is you have said nothing about numbers and accounting and CPA work, right? You're talking about automation and business process and helping a business grow. So it's almost like someone should expect a CPA to actually bring an ROI for a business.
Oh, 100%. And the nuts and bolts accounting that everybody thinks about, which is for the most part bookkeeping and taxes. That's what when you say accounting, that's what most people think about. That's table stakes, right? And you only do those things for two reasons, and one of those reasons is compliance. And what I mean by compliance is you have to file a tax return, or like an income tax return, or you have to file a sales tax return, or you have to comply with some sort of an audit for some sort of a reason, or bank covenants, or whatever. That's the compliance piece. And you have to do accounting for that because you have to provide them with accurate numbers for sure. The rest of it is the fun stuff. And that is so you can get information out of your business. So you can ask questions of your business and then get accurate, reliable, timely answers back. And so that can adjust your behavior. What I mean by that is I ask a question about my business. How profitable is this service, for instance? Okay, this is really profitable, or it's not. Now, what am I going to do with that information? Am I going to scale this up in some sort of way? Am I going to shut down this service line because it's not profitable? Am I going to ask more and deeper questions and then get to the root of whatever it is that we're talking about? That's the fun stuff. That's the advisory level, the advisory service. The advisory stuff is where all the ROI is. The bookkeeping and the compliance type stuff, that's for the most part, and I'm overgeneralizing here, but it's table stakes at this point.
Yeah, it's just foundational. It's like, of course, if I'm a CPA, I should know how to do your numbers and do the books. But let's talk a little bit more. Let's get you thinking on the plane of growth. And how can we scale? And now I got even more to table stakes, to fill in the blanks on your numbers, because now we've worked together and you're really coming alongside your clients as a business growth consultant, that happens to do it all.
Yeah, exactly. And you've got, but the foundational part of that, just like you said, it's all the numbers and making sure that the numbers are right, because if the numbers aren't right, then you got nothing. You're just making you're making decisions based on bad numbers. And that's not where anybody wants to live.
So, what is the first place that you point out to a business owner, marketing agency, when regarding metrics, numbers, KPIs, that kind of thing? What is the low hanging fruit where you go, hey, look, we're going to dive into some really deeper things in time, but the first few things that I'm noticing right now are?
Yeah, the first place that we always start is actually with the books, and then making sure that they're clean, making sure that they're accurate. Making sure that the chart of accounts, and what a chart of accounts is basically how things are. It governs the way that your financial statements are presented. So, and where that becomes really important is, again, making sure that you can ask questions about the data and then get the answers back that you need. And where we see a lot of problems with that is at the margins. And what I mean by margins is gross margin. So the variable type of expenses, making sure that what's variable is classified as variable, what's fixed is classified as fixed. And then we can start to, ask some interesting questions and get some good answers back. So that's where we always start, is with just the quality of the financial information, because if you don't have that, you've got nothing. You can't do any of the advisory work. It's impossible, basically. But that's where we start.
Yeah, because I would venture to say that you could pull out that chart of accounts and those numbers and lay it out on multiple, whatever, pieces of paper or computer monitors, and sit there with the business owner and go, okay, what do you see? And they're like, yikes, a bunch of numbers. And you're like, well, yeah, I see numbers too, but let me tell you what else. If we peel it back here, and if this number leads to this, here's some opportunity, because I'm looking past just the numbers. I'm looking at, right? So here's maybe some missed opportunities. Here is where maybe some leakage is happening. So let's plug up this leak. So what are some of those metrics that you're watching for to help them optimize to move the business forward?
Sure. So the next place we start is cash. What is the cash reserve? What does it need to be? Are you even tracking cash? We see that too.
You shouldn't need to ask that, but I'm sure you found that you do.
Yeah, it's one of those things. It's like you would think that the owner would know, but sometimes they don't. So things around cash. So we'll start with the cash reserve, doing that analysis. We'll get into some cash flow forecasting, making sure that we've got an adequate amount of cash going out into the future. This is like triage type stuff.
Yeah.
Right. Getting the books right, making sure the cash is right. This is the triage type stuff. So we need, our first goal is to make sure that you're going to be in business next month. And then we can start talking about scaling and growing and things like that. The next place we're going to be looking is AR, because that feeds into cash. We want to make sure that your invoicing cadence is good. We want to make sure that the things that should have been invoiced have been invoiced. We want to make sure that you don't have super old receivables hanging out there, because the longer that those are out there, the less likely it is that they actually become your money, and that's stuff that you've earned.
So about that, it makes me think of a quick question, if I may.
Sure.
Do you ever find people that are like, oh my word, I finished that project and we never invoiced them?
Yeah.
Or we invoiced them and yeah, I assume that they pay in 30 days, but it's been 180 days. Wow. And we don't have any protocols in place to send out a tickler reminder, hey, your invoice is past due. What are some of those things that you see that business owners or marketing agencies doing, and a quick little tweak and fix? It's like, wow, now it's running like a fine oiled machine. You're already doing the work. You already landed it. Just get paid for it.
Yeah, 100%. We were working with an agency owner just last week, and the question was, well, what's your top line revenue growth look like? Or top line revenue look like? Not even growth. What did your top line revenue look like? And the answer that we got back was, I don't know. Like, wow. Okay. And then it's like, well, I haven't, I'm behind on my invoicing. Like, okay, well, how behind are you? Don't know. So like, yeah, we see that it happens. Wow. It's out there for sure. Yeah, it's out there for sure. It's one of these things that, to some extent it gets back to how are you structuring your SOWs and your engagements with your customers. What sort of invoicing cadence are you coming to an agreement with them on? Number one, invoicing is great. But if you can migrate those folks to some sort of an auto draft or, some sort of a retainer or some sort of a subscription type service, like that is definitely the way to go. And that will definitely fix that problem for sure. Now, let's just say that you can't get away from that, or you don't want to get away from that for whatever reason. Well, number one is making sure that the invoices that should have gone out do go out, and putting processes in place for that. There's a bunch of different ways to do that, especially if you track time. If you're tracking time, then, we can see, well, these hours were tracked to this client and we haven't seen an invoice for a while. Why? Right.
Yep.
For us, having access to your contracts with your clients and being able to kind of track that's helpful for us. That provides some context. But let's just assume that all of your invoices are out and, you're doing that timely, and that's great. Just making sure that we're talking about and tracking AR on a consistent basis, and that really should be weekly, just to say like so this invoice is out and it's now, 60 days past due. Like, okay, well, now what?
Because if that project that you did for that client to generate that invoice, if you had been 60 days past due in delivering on the deliverables, they'd have been raising the roof.
Sure. Absolutely. Rightfully so.
What's the difference? Why would you let it go? So I think like the one you said when you asked about top line revenues, like, I don't know. It's like, okay, that is a person that is just nose to the grindstone, just getting her done. Yay. Good. You're diligent. You're working hard, but boy, that I'm just envisioning that bucket with holes in it, water flowing out. You got the water flowing in and you got a big bucket. Good. But man, if we could just plug up this hole most of the way, you're never going to plug up holes, but I think it's just that mindset. So it makes me also think about when you ask that question, top line revenue, what if he had this exclamatory, oh my word, we're doing so great this year because we've hit X. And so many times we see this on Shark Tank and it's like, wow, our top line revenue was $1 million. And it's like, Yahoo. And then all of a sudden it's like, yeah, but our expenses were 1 point whatever. And it's like, well, then now our top line revenue doesn't really do much if we haven't paid attention to the outflow, right? Because really at the end of the day, it's like, good, you've done a good job getting attention to your product or service. You've delivered, you've brought money in, top line, good. But man, you got to manage it well so that you stay in business and you can expand and scale.
Yeah, 100%. Like the first step before even like profitability is let's make sure that we're in business tomorrow.
Yeah.
And then we can talk about profitability and cash flow and things like that for sure.
So where do you then look when what's the next step? Because now you've done your triage. We're in business tomorrow. We got these holes, starting to plug up with some AR and some maybe automated things so that we get your receivables in line. Where then are you looking?
Then we're going to look at profitability, and we're going to look at that in the context of growth rate. Super important. You can't just look at profitability and say like, oh, well, our profitability is too low, our profitability is too high. You have to look at that in the context of growth. And the reason why you have to look at that in the context of growth is because faster growing businesses necessarily so, and if not, you're going to have different problems, but necessarily so are going to be a little bit less profitable. At least that's what we've seen. Reason being is because you're bringing on capacity and you're making investments in the business ahead of time, or at least you should be. If you're making the investments in capacity and things like that after the fact, you're going to have different problems. The problems that you're going to have are going to be delivery. The problems that you're going to have are going to be sending out those invoices, like you just said, nose to the grindstone. I don't even have time to send out the invoices, so I don't even know what my revenue is, and I don't even know who owes me what. Right?
Yep.
Those are the downstream impacts of not investing in that capacity, beforehand and trying to do it after the fact. So, where we're going to look, like I said, is going to be on that net margin percentage in the context of growth. Now, if that is too low, like you've got a low margin business and a low growth business, where we're going to start looking, first place is going to be on the expense side. Where we start with that is the low hanging fruit always is software subscriptions, and kind of just doing an analysis of what that looks like and who's using what and why, and whether or not there's any overlap. It's just low hanging fruit. And it's one of these things, in our society today, it's so easy to sign up for a new tool or a new thing and sign up, the entire agency, 10, 15 people for it. And like nobody's using it. Right. So that's the easy place to look. The hard place to look is always going to be on the people side.
Yeah.
The last thing you want to do is lay off people, and that reduces capacity. It creates a bad culture. There's no good that comes from that. So the first place is the software side. It's easy. Right. And then we kind of work our way through the P&L that way, just going account by account, like what can we cut here? And that's why it's so important to have really good, solid accounting data that's got like a vendor or a supplier, whatever you want to call it, attached to these expenses. So that we can actually do that analysis and say, okay, you're spending $100 this month with vendor XYZ, and do we really need this and that sort of thing? But that's where the accounting data comes in, and so we can actually make those decisions.
Or when it's tied, linked up that way, you can say you're spending this with this vendor to accomplish this task. But you know what? In our experience, we've seen that there's another vendor out there that does the same thing, if not better, for half the price. And that's where then your expertise comes in to go, wow, let's take a closer look at some of these things. Keep doing the same automations and things, but here's a better vendor because this company's more on top of whatever that it is. So I think that's a neat insight that you can bring because you're not too close to the forest to see the trees.
Yeah, exactly. Or, hey, you've got plenty of cash in the business. Why don't we go and pay this vendor for an annual subscription and save 30%? That cuts down our cost, and it's not going to hurt cash flow, and everything will be fine. That we can have that conversation too.
And probably that makes so much sense because it's there, and that's low hanging fruit. And probably the owner's like, oh yeah, I saw that, but I always ignore it because we're on the auto pay of monthly whatever, and 30% is only whatever. Let's say that it's $300 a year. Well, guess what? If you add a zero to it, now it's like, ooh, that's 3,000. Ooh, if another zero. So in other words, the more and more things like that you can get a 30% savings on, it might not seem much in that one transaction, but when you do it over and over and over, it just adds up. And it's kind of like, have you ever read the book by Darren Hardy, The Compound Effect?
I have not, but I'm going to put it on my Amazon list. Okay.
It's a really good book. Darren Hardy is the former publisher of the Success Magazine, spectacular writer, thought leader, but The Compound Effect. It's a really quick read. And one of the key points is, you need to make a compounding effect, kind of like what Einstein said, one of the wonders of the world is compound interest. Well, what about the compound effect of improving your personal life 1% in this area and then 1% in the other area? So over time, all of a sudden, it's like you've made some pretty big changes without a massive change. And same in the business. What if you can make a small percent change in AR, in automation, in incoming revenue, in top line, in all of these things? It's the compound effect. And if you look at the one thing just on its own, it might not seem like much. But when you take all these recommendations you're bringing up, wow, at the end of the year, you look back and at your time, you sit down with the business owner, you're like, check this out.
Yeah, 100%. And to piggyback off of that idea, historically, when you go to sell your agency, it's gonna sell on some multiple of cash flow to the owner. Really, that's what it boils down to, right? And it's going to be, I don't know, let's just say it's 4 to 6x. Well, if you're not really operating your agency any differently, you're from a marketing sales perspective, bringing on more work, scaling, that sort of thing. If you're just making a few little tweaks so where you're more cash flow positive, right? Just from operational stuff, getting invoices out on time, following up, blah, 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 annual software subscriptions, things like that. And let's just say that you somehow create, I don't know, $10,000 worth of cash flow. When you go to sell your agency, not only have you gotten the benefit of that $10,000 of extra cash flow over whatever period of time you own it, but when you go to sell it, you're going to get, it's going to be worth $40,000 to $60,000 to you.
Yes.
In the selling price. So, I mean, that's enormous. And you can do that, from what we've seen, just by making little operational tweaks and just being a little bit more intentional about how you're operating from a financial aspect.
That's huge. And it reminds me of one more book recommendation. Have you ever read Built to Sell?
Yes. And it's awesome.
Yeah. It's the mindset. And if anyone has not read that book, it's a quick read, kind of a fictional storybook story of, this guy that's like, oh, hey, I don't like my business. I want to sell it. And the business consultant goes, yeah, but it's not in great shape. Let's, get it into great shape first so you can sell it for that multiple. And he teaches them systems and all this stuff. And now all of a sudden the guy's like, wow, do I really want to sell? So it's the mindset shift of, man, let's get things working smoothly so that you feel like you have a business, actually a business, not another job. You just go from working for corporate America to working for yourself, but you're running in 48 directions. So I think that this whole mindset shift that you're bringing to light here goes just exponentially beyond doing the books.
100%.
Well, I'll tell you what, Chris, this has been enlightening. I love your approach to business. If someone is listening to this going, take a peek under my hood and look at my books and what can we do together, what's the best way they can reach out and connect with you?
Yeah, I appreciate that. So the best way to get in contact with me is through our website, betterwaycpa.com. And if you go to the top right there, you'll see a drop down for resources. We've got blog posts about all this stuff. We got ebooks about all this stuff, YouTube channel. It's all free. There's a ton of resources to go a little bit deeper on some of the things I've talked about today.
Awesome. Thank you so much, Chris. It was a real pleasure talking with you today.
Thank you. I appreciate it.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.